Hello and welcome back to the Rekt Capital channel. Welcome to today's video update. I hope you're having a fantastic day wherever you are in the world. Let's dive right into this update. We're going to be focusing on Bitcoin as usual. In yesterday's video, I was covering a few key levels to watch out for, and we've reached one of those key levels. We are at a supply zone at the moment. And by the way, guys, this head and shoulders I was talking about yesterday, it's been invalidated as we've seen an overextension in price, invalidating that right shoulder, and as a result the head and shoulders altogether. And part of that is also the volume. So we've seen a declining volume profile on the head and shoulders, but if we see a green volume bar like this develop when price is at a resistance, we're going to see a breakout and we're going to see a invalidation of the head and shoulders. Ideally for a head and shoulders, you'd like to see a breakout on sell side volume rather than buy side volume. But that's a small digression. We're at this supply zone right now at the 7,000 region. And of course, we even saw a liquidity grab. We saw price wick towards this area of 7,200, which is the 2-year moving average. And as you guys know by now, the 2-year moving average is a very key reference point for price going forward. And we're going to talk about that in just a moment as well. But in any case, this looks like it was an ascending triangle, something that we were also talking about over the past few days. But the difficult thing here was we were also seeing a head and shoulders structure as well. So unfortunately for traders, it was a very ambiguous price situation, which is why we need to zoom out to higher time frames just to gain a perspective, because a lot of people are losing the forest for the trees. People are zooming in too much and looking at the fact that we might be at 6,900, we might be at 7,000, 6,800. People are focusing on these short-term fluctuations in price and they're losing that perspective. So if we zoom out, we can see we have a wedging structure here building below the 2-year moving average. And this 2-year moving average is essentially telling us below the 2-year moving average is an outsized area of return for Bitcoin. That's the macro perspective. So essentially speaking, in the longer perspective, this is very good price action for long-term investors to try and accumulate at. But of course, this black diagonal of the wedging structure isn't really working anymore since we've seen a breakout, right? We've seen a breakout past that black diagonal. And this was the black diagonal that I placed based on these two data points of resistance. But unfortunately, we are actually seeing price go towards the upside, which is invalidating this black diagonal resistance. And in fact, this goes back to a possibility that I was talking about on March 26th in a previous video. And if you'd like to learn more about this indicator and my entire view about it, that's still a very much relevant video because it looks at the long-term perspective, which hasn't changed in the past few weeks. But in any case, it looks like this 2-year moving average right over here is going to be that key resistance for Bitcoin. And as we know, based on that video that I just suggested to you guys, we tend to see rejection from the 2-year moving average, which is around 7,200. So as long as price is in this area, in this wedging structure below the 2-year moving average, another low is still very possible. But make no mistake, price is still consolidating in an area of outsized return on investment. And that's something we need to bear in mind, because it doesn't necessarily matter where this resistance will be, because ultimately it's all about having that possibility and being prepared for the possibility of another major low for Bitcoin to be able to fill lower bids for bids at cheaper Bitcoin prices. That's my main focus as a Bitcoin investor going forward. Am I going to get that possibility? And the answer, based on history, based on how price behaves relative to this 2-year multiplier indicator, that possibility is still very much real. And there are a few indicators that are still supporting this. The difficulty adjustment that I've been talking to you guys about. This difficulty adjustment, one of the sharpest in Bitcoin's history. We've recently seen that it's made the Bitcoin blockchain a little bit more efficient, as we can see from the amount of time that it takes to mine a block. As we were talking about, I was expecting a revisit from 12.5 minutes as the time that it takes to mine a block on the Bitcoin blockchain, it's returned to the average 10 minutes, which is something we were expecting. We tend to see these sort of deviations whenever the Bitcoin blockchain isn't efficient, and that tends to happen when we see minor capitulation and strong price reversals in Bitcoin, to the downside specifically. So this difficulty adjustment really helped miners, really helped them become more profitable. And though this difficulty adjustment is a very bullish thing in the long run, because of course miners are going to want to flock to the Bitcoin blockchain to mine for it, to mine for Bitcoin. In the short term, we tend to see retraces in Bitcoin's price action. And of course, we haven't seen that just yet, but this difficulty adjustment is a very good predictor of that. And the past few adjustments have been a testament to a predictor. This difficulty adjustment being a predictor to Bitcoin retracements. And you can see that in the black here, and of course over here as well. So this is still something I'm still bearing in mind, because the macro perspective hasn't changed. You're seeing a lot of noise on the short term, but we need to focus on the macro perspective and what it's telling us. So I've been talking to you guys about this difficulty adjustment and how it could potentially precede downside in Bitcoin's price action. And of course, if we zoom in all the way here and we focus on the recent price movements in Bitcoin, you can see that these are just squiggles in the macro perspective, but we are very much lost in this short-term fluctuation. But it's just key to zoom out and be prepared for what this short-term noise could essentially translate into, and it could be the case that we could see another major low, especially if we see that rejection from 7,200. And this may very well tie in with the profitability in the network. So whether the network is in a state of unrealized profit or loss, at the moment we've seen capitulation over here, and now we are in a state of hope for miners. Miners are hopeful because Bitcoin has been grinding up slowly but surely. The difficulty has adjusted. It's a good time for miners because they are profitable after a period which was really tough for them. That capitulation, that price dump to 3,800, that was very tough for them, so they're now enjoying a bit of relief. But if we look at all these different times at lows, you can see that we tend to see a higher low, or even a lower low. But the thing is, we tend to see price and this unrealized profit and loss consolidate within an area and form a certain low, whether that's a lower low or a higher low. We've only seen a bottom in this period, and in fact there is a bit of curling down over here. I don't want to make too much of that. I just want to suggest to you guys that it is possible that we could see a low in terms of this indicator, in terms of these on-chain analytics, which you can check out for yourself in the link in the description down below. The on-chain analytics, you can sign up with a free account. It's totally free, and it's very useful for me in terms of predicting these price swings, because of course price analysis data can give you insight about psychology, but so can on-chain analytics. So check out the link in the description if you're interested. And these are on-chain analytics that I'm going to keep an eye on going forward. Are we going to get that higher low? Because we've got that in the past before, and every time we actually see a retracement in the unrealized profit and loss, we see a retracement in the price action of Bitcoin as well. And prior to halvings, these blue lines are halvings, so these pink areas prior to halving 1 in this case and prior to halving 2, we tend to see that this unrealized profit and loss tends to see a retracement prior to the halving. So I'm just wondering whether we're actually going to see a retracement prior to the halving, and maybe even going past into the halving to form a higher low, just like this and just like this. And of course, a retracement in the net unrealized profit and loss of the Bitcoin blockchain is going to tie in with a retracement in Bitcoin's price action. So it's an interesting time. Another major low is still very much possible. Bitcoin Investor Tool is suggesting that to us. The on-chain analytics are suggesting that to us as well. 7,200 is a very key level, and I speak about key levels in my previous video. So if you'd like to check that out, feel free to go ahead and do so. There are 4 key levels that I'm watching out for, so I've spoken about that in so much more detail in the previous video. But in any case, as long as Bitcoin is below 7,200, another major low is still very much on the cards. But once we break past this 2-year moving average, we might see an initial rally towards the upside followed by a retrace just to see a support test for that 2-year moving average to test itself into a new support. So if we'd see a breakout past this point, it would essentially look like this, where we'd see an initial rally, a test of this 2-year moving average into a support, and then continuation into a new bull market. But in any case, that's about it for today's video. Thank you so much for watching. Please consider dropping a like, of course, and if you'd like, feel free to subscribe for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.